Hello, everyone. Welcome again to another financial analysis video with myself, Moeed Amin, and my colleague, Ted Wayman. Today, we're going to be looking at another mining company. There have been quite a few that we've been looking at in the past, and this one has come recommended, and I'll requested actually, and I'll come to that in a moment. We're looking today at Zinnwald Lithium. So Zinnwald Lithium are a mining company, as I said, and actually they're based in, their project is out in the Saxony region of Germany. And essentially they are looking to extract and process battery grade lithium to help Europe with its electric vehicle initiative. Now there's been some movement in the share prices, which we will come on to later on. I think they floated in December of 2017, some ups and downs, so stick around. We'll come on to that in a moment. And this company was requested a few times, but I've extracted the most recent one, and it's come from one of our viewers. So thank you for sending that over to us. I'm not going to try and pronounce your username. I can't do so, but thank you for your request, and here's your video. Before we get on to the financial analysis, just a quick note on the purpose of these episodes that we have in this show. We're not here to give you financial advice. We're certainly not here to help you with your investment decisions. If you're looking to buy any stocks or any options in this business, that requires a huge amount of thesis. That is not the purpose. The purpose for this show is we are helping people improve, elevate, whatever you want to call it, their knowledge in terms of financial analysis. So being able to read these financial statements, draw inferences, draw some analysis out of that, and that in turn will form a part of either your investment thesis, or if a lot of people that follow me who are in the sales profession, this kind of information is valuable for your sales approach. Also, we get some people that are interested in, they have an interview with these companies coming up. They want to sound really smart in those interviews, and they look to our financial analysis for that. So do please note that that's the purpose for this. We're not here to help you look into the future. These are backward-looking analysis of their financial statements. So without further ado, Ted, let's share with our viewers what we found out about this company.
Absolutely. Okay, so good to see you, Moeed. Thank you very much. Yes, and hello to our viewers. Don't forget to like, share, and subscribe to the channel. It really helps us to build our audience and to take this analysis further afield. And just to reiterate exactly what Moeed was saying, you can't value a mining company, which is very much valued on the future, by looking at the financials. And I'm sure that somebody will give me that comment in the comments section. So I'll save you. We know you can't do that, but we are looking at the financial statements, and this should form, if you are an investor, part of your thesis. Understanding what's going on in the business is quite useful. So here we are, Zinnwald Lithium. We are looking, this is the full year ended 31st of December 2020. Okay, so 2021 is not yet available. We will have a quick look at the update, which is the half year, the interim statement. But here we are looking at the audited financial accounts, the latest set of audited financial accounts, and we're going to start by looking at the numbers on the in the income statement. So here is the income statement. We're dealing in euros. And the company is, well, it's still in the mining stage, so it's not in the extraction, sorry, it's still in the exploration stage, it's not in the extraction stage, and therefore there is no revenue. A little bit of cost of sales, I think, I'm not sure exactly what that relates to, how you can have a cost of sales with no revenue, I'm not sure, but anyway, they do have a little bit of cost of sales, but really you can see sitting on the income statement that the costs are all around the exploration costs, and then they've got these administrative costs, etc., etc. So all of these costs are sitting there, and that's really what's driving this company, which is operating at a loss. Now, we'd expect that from any company which is in the exploration stage. They're going to make a loss at the exploration stage. They then strike gold, or in their case, they strike lithium, and then they start extracting it, and then they effectively cover those costs with the profit. And of course, unless they don't strike lithium, in which case they don't. So you're very much betting on the future here, and whether you buy in to the story that the management team are telling you. But the financials are telling us the previous year, 2019, they made a €500,000 loss, and last year, 2020, they made a €2.2 million loss. So there is the income statement, and we're going to have a look at the balance sheet now. Here is the balance sheet. So first thing we notice on the balance sheet is the non-current assets up here. That's this bit here, has significantly increased, and the main reason for the increase is this investment in a subsidiary. So these guys have effectively bought a subsidiary to expand their exploration operation. You'll also notice in the current assets that the amount of cash they've got has also significantly increased. Now, if you're operating at a loss and your cash goes up, you've probably been raising money on the equity markets, which these guys have, and we will be able to see that further down at the bottom part of the balance sheet. So scrolling down to the bottom part, we notice, first of all, there are effectively no liabilities at all. They've got a little bit of trade and other trade payables here, and you'll notice there's no debt. So looking at the income statement, they have no, they're paying no interest. If they're paying no interest, they have no debt, and it kind of makes sense. No bank in its right mind, if you say, look, I'm going to go dig around over there and I might find some lithium, banks are very unlikely to lend to you. So it's equity funded, and it's equity funded because it's very high risk. But obviously, with that risk, you expect a potential return. And so, when we looked at the introduction to the company, they were talking about, very high potential net present value on the investment, very high internal rates of return, but it's all about that word potential. So down the bottom, we see the equity in the business, and the equity, you'll notice here, the share premium has increased. And also quite funny here, we'll look at this a little bit later on, you'll notice that the retained earnings, well, it was a retained loss, the retained loss has fallen. Now, that usually would suggest that this is a company which has been making a loss and is now making a profit, but it hasn't. It's been making a loss. So we might kind of ask ourselves a question and say, what's going on here? A little bit of kind of shenanigans maybe. So we'll have a look at that a little bit later on, but just something to kind of raise, to highlight there, that we can see the fundraising coming through, but for some reason their retained earnings has turned into a retained effectively has reduced, the retained loss has reduced, suggesting they make a profit, but of course they didn't make a profit. That's the company balance sheet. So here's the movement in equity, which will help us. So the previous year, they've been sitting on about 1.3 million euro loss. They made a €500,000 loss, and therefore they're up at nigh on 2 million euro loss, which they carry forward into the year under question, which is 2020. And here is 2020. So they start with that nearly 2 million euro loss. They make another 2 million euro loss during the year. That comes straight from the profit and loss account. We saw that earlier. Really interesting what's going on here, though. So you'll notice that they've raised 7.6 million euros by issuing shares, and then they've taken about 4.4 million euros and allocate it into their retained profits. Now, I have no idea. I didn't know you were allowed to do that. I have to admit, that's news to me, that why you're allowed to do that, or why you would want to do that, because unless they're kind of window dressing. But what they've done is that they've effectively allocated it, and then they've got this dividends. So they've then taken that money and paid out a dividend, which is really odd, to go to the shareholders and say, I want to raise some money and then pay a dividend. Now, it looks to me like the dividend would have been paid to people other than the people who have raised capital, which if I was an investor, I'd be feeling a little bit unhappy about, that I'm investing in a company which takes my money, and the first thing it does doesn't invest it in exploration activities. The first thing it does is just pay out a dividend to another party. So not sure exactly what's going on there. Perhaps if somebody is watching this and has greater knowledge of the business, they'd like to share your understanding in the comments. Obviously, please do be polite at all times, but exactly what what is going on here. And so here you can see the retained earnings for this company. They're sitting on a retained loss of 95 million, when in fact that should be a retained loss of about 4 million, 95,000 euros, and it should be a retained loss of about just over 4 million euros. So yeah, so we can see this kind of, anyway, they've raised the money. They have done a share issue, and they are using, there's still some of that money left, which they are using for their exploration venture, and that's reflected in the cash flow statement. So here is the cash flow statement, and we can see, these guys, they're burning cash on the operation as we'd expect. They are investing. So there's a kind of the investment in joint ventures, exploration expenditure, that's all going on there. And we also see, let me just clear that and just scroll down a little bit further. And then we can see the issue from the issue of shares. Now, again, quite interesting. So not sure exactly what is going on here with the proceeds from the shares of 5.9 million euros. So they've got a proceeds coming in, the cash coming in 5.9 million. Here you can see the issue of shares is 7.6 million. So there's a little bit of an anomaly going on there. We can see in terms of the investing that they're spending 424,000 on investing. Yet if we go to the balance sheet, we'll just go back to the balance sheet, you'll notice, you see this investments has significantly increased. Note 16 tells us about that, and that's effectively an investment in a subsidiary. So that note 16, let's just find it, here it is. So here the investments in subsidiaries are recorded at cost, which is the fair value of the consideration paid. So again, so these guys, it looks to me like they've paid 3.8 million euros to invest in this joint venture. Actually, I guess that's the subsidiary. So investments in joint venture, but for some reason it hasn't affected their cash flow. So I'm interested as to how they actually ended up with that 3.8 million, where that valuation came from, because it's certainly not sitting in their cash flow, if that makes sense. You'd expect to see, investment in you'd expect to see under the investing activities, you'd expect to see within this section up here, you'd expect to see that investment in the joint venture, and we can't see it. So how that's valued on the balance sheet, I'm not absolutely certain. So there's there's bits and pieces in here that just kind of, just for me, it just doesn't add up. Now it's audited, and I'm happy, again, it's audited. So we've had an independent review of it. So I'm sure that everything is well, I hope everything is above board. That the fact that it's been audited doesn't necessarily mean it's all 100% fine, as we read in the newspapers. But there's just bits that don't add up, and especially I just don't like that issuing shares and then booking substantial proportion of that shares as retained profit, because it isn't. It's just not a retained profit, unless I'm missing something, and I may be missing something. I do get it wrong. I'm not infallible, and if I have missed something, then please do share your thoughts and point out my error in the comments, obviously being polite. So anyway, we'll come on to the share price now. Once again, we all know that we're not trying to value an exploration company off the back end of these financials, but it is worth knowing that, for example, in terms of their cash burn, they've got about the current cash burn rate, they've got less than 3 years worth of cash sitting in the bank. So if you are investing in a company, it's quite an exploration company, it's quite interesting to know how much are they burning, how much cash have they got in the bank, and what's their longevity, how long until they have to go back to the market or strike that seam of gold and start extracting rather than just exploring. Okay, so these numbers are important for the business. In fact, we did mention that we'd look at the half year. So here is the 6 months, and things haven't changed that much. They're still operating a loss. So 6 months is €1 million. you know, a year will be 2 million euros, so pretty much the same as the previous, you know, as the numbers that we've been looking at, you know, and they're still burning cash. So, you know, things haven't changed that much in the 6 months. It's still kind of, you know, they are still in that exploration phase. So here is the share price. And you can see it's you know, it's been a pretty rocky ride. There's no price to earnings ratio because there's no earnings, there's no dividend yield. Well, they're not paying us a proper market dividend. And market cap is 49 million. No, don't forget that's 49 million pounds, which approximates to, you know, just shy of 60 million euros. 60 million euros. It's you know, I mean, I have no idea how to value this company. You know, you can't value it on multiples of sales. You know, you can just say, look, you know, they've got 10 million on the balance sheet in terms of equity. So you're paying 6 times that. So, you know, this is an outlier. This is, you know, this is your multi-bagger. You know, potentially if they strike the right seam, and you understand their kind of their projections, then, you know, you could make a lot of money on this. But don't forget, this is very much a jam tomorrow stock, not a jam today. And we've discussed this. You know, this is now February 2022. We are facing, you know, inflation, high interest rates, and jam tomorrow stocks really don't like that. So, you know, this is not, you know, these guys have got to deliver if you're going to see the value. You know, it's not the kind of, you know, continued speculation forever. And so companies like, I think, like Zinnwald Lithium are going to find, you know, the next fundraising round in 3 years' time or 2 years' time. I think they're going to find it a little bit more difficult unless they really can start to show that they've actually, you know, you know, they are at least very close to you know, breaking even and producing a profitable mine. So there you go, Moeed. That's my kind of my analysis of Zinnwald Lithium. You know, as I said, you know, we can't take the financials and project that into the share value. So we look at, you know, as you said, you know, we're here to look at the financial analysis. We're helping people to read and interpret financial information to improve your financial fluency, helping you to talk financials. And we kind of, you know, if we're going to look at a company, we say, well, why don't we look at the share price if it's listed, because it's of interest. But you know, that there is a very, very tenuous link between the two, especially when you are looking at a company such as this, who are a mining company.
Yeah, and that's still very interesting because, you know, especially if you sell to a company like this, or you're thinking about doing business with them in any way, shape, or form, understanding those finances actually gives you a peek into probably the decisions that the executives are making. So very, very interesting. Don't forget to like, share, subscribe. And here's the reason for the subscribe. It's not really for our ego. We don't need that. Actually, because we get so many requests, if you're a subscriber, you will get notified for when we publish your request as soon as it's published. So it's in your interest to do so. So do let us know if you have any companies that you would like us to analyze for you. Leave a note in the comment section, and we will get onto it. And do leave a kind of a background story, a short one, as to why you want us to analyze this company. So if you have an interview, and if you can give us the date of when you have that interview, that will help us make sure that we raise your request up the priority ladder, because we get a lot of these. So until the next video, thank you, everyone. Thank you, Ted. We'll see you on the next analysis.
Thanks a lot, Moeed. Catch you later.